on Daily Forex. This is Chris taking a look at the US dollar against the Malaysian ringgit. It's been a few days since I've looked at the ringgit, and you can see we have completely collapsed at this point. Now we have to look to longer term Fibonacci perhaps as a guide, but clearly this is a market that right now is hitting the 61.8% Fibonacci retracement near the 4.44 level from the swing in February of 2023. If it doesn't hold here, it'll be interesting to see what happens next. And I would use the candlestick from the previous session on Monday as a sign that we are going to do a complete round trip. That would have the 4.40 level violated to the downside on a daily close. It certainly looks horrific. And I think at this point in time, you have to understand that money is being repatriated into Asia. So this might be a little bit of a knock-on effect from the carry trade being closed out in Japan. Regardless, we are in a situation where if the Federal Reserve doesn't cut or doesn't cut as aggressively as people have been begging for, this pair will spike to the upside and probably hit 4.65 quicker than you can imagine. On the other hand, if we see the Federal Reserve cut drastically, we could break down below the 4.40 level, perhaps going back down to the 4.22 level. It's at that area that I think longer-term institutional investors, and I stress the word investor, could probably get involved. That would make a nice target for the short sellers, but quite frankly, this is an oversold market. And therefore, I think you've got a scenario where it is probably only a matter of time before we get a bounce. Clearing the 4.50 level to the upside is probably your sign that a long trade has set up in this market.